Hey folks, hope you are doing fine. Welcome to our daily analysis for Nvidia stock. So based on today's research, I have prepared some important analysis to share with you regarding this company. Here are some questions I'm going to answer. What's driving the stock today? Is this bounce real or just a technical squeeze? How material are the macro risks, crypto fear, Fed noise, geopolitics, to Nvidia's AI runway? What does the new partnership/infrastructure news change about demand visibility and Tom Lee NUKE on Nvidia? And finally, what's a practical trade plan depending on your time horizon? Let me start with the headline setup so we have a map to work from. As of December 24, 2025, Nvidia is trading around the high $180 after rebounding from recent lows and pressing into resistance near $190 to $195. A move that on its face looks constructive but that needs volume and catalyst confirmation to convert into the next durable leg higher. I know what you are thinking, but let me explain. Hear me out. From what I have been analyzing, this is not a simple, buy the dip trade, it's a layered story of technology dominance, macro crosswinds, and price action verification. I don't think we are going to get a clean, straight line breakout immediately. That doesn't mean that we can't. But for anyone thinking about aggressively adding size right here, now, let me address the question you really want answered: is Nvidia a safe haven or a high-wire act? I want to be very clear, the answer depends on time horizon and discipline. As of December 24, 2025, the financial world is buzzing with speculation about the future of the Magnificent Seven tech giants, and Nvidia stands out as a potential frontrunner. Amid a cryptocurrency market gripped by extreme fear and Bitcoin sitting roughly in the $80,000 to $90,000 zone, investors are searching for growth and relative safety inside tech. Nvidia, with its massive market presence and blockbuster YTD performance, is increasingly seen as a beacon in a volatile landscape. The stock is up substantially year-to-date, roughly mid-30% territory, and sentiment reflects a belief that Nvidia is not just riding AI, it's shaping the infrastructure that will power the next decade of models and applications. Why this matters to you: when markets rotate to risk on or risk off, the leaders, and especially the leaders of structural shifts like AI, often behave differently than the broad market. That can be a blessing, leadership holds up, or a curse, crowded positions amplify drawdowns. The tape today: price action, resistance, and volume. Let's cut to the tape. Nvidia recently rebounded from a low near the mid-$170 and pushed into the $190 to $195 resistance band. The bounce has technical characteristics of a short cover plus retail re-entry rally. Price improved over 2 sessions, the RSI ticked back above neutral, and early MACD signals are turning constructive. But the volume profile on the move has been lighter than ideal, which matters a lot. When price rises with thin volume, algos and technical traders often interpret the move as a short squeeze or position rotation rather than a fresh institutional accumulation. So here's the practical read: a clean break above $195 to $200 with expanding volume is needed to validate that short-term momentum is durable and that institutions are buying instead of sellers simply covering. Until that shows up, treat rallies as tactical opportunities rather than macro confirmation. By the way, if you are finding this content resourceful so far and want more like this, like the video, it means a lot to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The broader macro picture is noisy. Crypto sentiment is very risk-averse. Notable indicators have signaled extreme fear, and Bitcoin's year-end moves reinforce the market's cautious tone. That risk aversion is contagious. It tightens liquidity, increases correlation among growth names, and makes breakouts harder to sustain without a clear fundamental lead. In short, a pervasive risk-off psychology punishes even high-quality growth leaders unless the news is unambiguously strong. Additionally, next year's first half is set up for event-driven volatility, potential policy shifts, political headlines, and the new Fed chair confirmation process could all trigger broad market whipsaws. Expect macro-driven episodes where even Nvidia's technical certainty may get tested. That's why, from what I have been analyzing, position sizing and plan matter more than conviction without a timeframe. Nvidia's structural bull case, data centers, and platform lock-in. Now the reason Nvidia is still the center of the AI conversation: it sells platforms, not just silicon. The hardware is critical, but the software stack, libraries, developer tools, and ecosystem integrations, CUDA, NeMo Gym, model optimizations, orchestration layers, create a high switching cost for customers. Enterprises and hyperscalers building production AI pipelines invest heavily in other parts of the stack beyond raw chips. That's why Nvidia's leadership is sticky. From what I have been analyzing, the AI TAM remains massive, hundreds of billions of dollars across chips, systems, software and services, and Nvidia sits in the high-margin, high-influence portion of that market. Strategic partnerships and infrastructure commitments, public and private, are visible in the press. Nvidia's programs with national labs, academic partners, cloud providers, and major research labs add to demand visibility and long lead procurement cycles. Those relationships are not fleeting, they create durable demand backdrops that can support multi-year revenue growth. In the past months, Nvidia has announced a string of collaborations with national labs, research institutes, and industrial partners, moves that do more than generate headlines. They signal multi-year deployment roadmaps and validate Nvidia as the default vendor for large-scale AI systems. For example, recent U.S. Department of Energy collaborations and other high-profile partnerships show Nvidia contributing accelerated computing to national research initiatives and broader infrastructure projects. Those are long lead and capital-intensive commitments. That matters because cloud and research deployments often translate into multi-year chip purchases and system orders. Again, this is why a partnership can be a structural validation even if it doesn't show up as revenue this quarter. It improves visibility and reduces demand risk over the medium term. Insider flows, why you should read them but not overreact. Headlines about insider selling can create headlines, and serotonin spikes for bears. There have been material insider transactions in 2025 where directors and trusts executed planned selling programs, with gross proceeds reaching tens of millions across multiple entries. That matters, it's real money on the tape and it's worth watching. But context is everything. Many of these sales were executed under Rule 10b5-1 plans, prearranged trading schedules, and are often executed for estate or diversification reasons rather than a negative read on the business. From what I have been analyzing, insider sales should be considered a signal and not an automatic trigger for panic. Look for patterns. One-off planned sales are different from repeated coordinated selling by several insiders over a short period. If the latter appears, reassess. If not, treat the filings as data, not a verdict. Let's get tactical. From a technical standpoint, here are the clean levels and indicators to watch. Live chart checks required before trading support. Mid-$170, roughly $175, 178, this zone has held multiple times and is the short-term anchor. Resistance, $190 to $195 cluster, near-term, and key psychological $200 mark above that. $200 is the confirmation level for the next leg. Moving averages, price sits comfortably above the 200-day moving average, a core long-term trend line, and is regaining footing above the 50-day moving average, shorter momentum signal. That combination often points to a structural uptrend with a recent consolidation phase. Momentum, RSI came back above 50 and early MACD lines show a potential cross, bullish but not decisive without volume. Volume, the rally to date lacked large volume expansion, a concern. Real breakout credibility requires higher than average volume accompanying price continuation. I know what you are thinking, that's a lot of technical caveats. Hear me out, when a high conviction name consolidates, the technicals are the market's way of telling you whether money is rotating in or simply repricing. Valuation is the sober part of the discussion. Nvidia's market cap is enormous, reflecting a consensus that it will capture a very large share of future AI spend. Public market trackers show Nvidia as one of the highest valued companies globally in December 2025. That size creates a simple arithmetic problem. When you're large, you need large absolute dollars of incremental profit to justify further multiple expansion. Macro or demand hiccups therefore have a larger dollar value impact on total market value. Recent market cap trackers indicate Nvidia's market capitalization is in the multiple trillion range. Sources vary by intraday pricing, underlining the scale of expectations priced in. That reality means the margin for error is thin. A quarter or two of weaker guidance or lost pacing can trigger outsized multiple contraction. From what I have been analyzing, that's the core investor tension. dominant position versus heightened execution expectations. Nvidia's primary moats are hardware performance and ecosystem. But the competitive landscape is evolving. Hyperscalers, Google, Amazon, have been advancing custom silicon, and open-source models and alternative accelerators are improving. Google's TPU family, specialized inference chips, and vertically integrated approaches are all real counters. They can reduce demand in certain segments or create heterogeneous fleet strategies where Nvidia remains a major, but not exclusive, provider. There's also improved, in-house, chip design by large cloud players that can act as partial substitutes. All of these create tactical pressure points. From what I have been analyzing, the most credible competitive attack is not a single new chip that dethrones Nvidia overnight, but a slow, steady diversification of procurement by hyperscalers and enterprise customers seeking redundancy and cost improvements. That keeps Nvidia's margins and pricing power under supervision, even if it doesn't kill the long-term thesis. Here's the deeper strategic debate that's quietly shaping the next several years. Are we still in a scale beats all era, more chips plus bigger models, or is there an architectural inflection coming that materially reduces compute intensity per useful outcome? This argument is being debated among top AI researchers. Some argue scale and compute remain on a credible path to progressively better models, others argue a new architectural breakthrough, or algorithmic efficiency revolution, could sideline the need for vast compute volumes. If the first camp is broadly right, Nvidia's compute-heavy business model remains central and validated. If the second camp is right and a new approach drastically lowers compute needs for equivalent outcomes, a lot of anticipated capex could get delayed or reallocated. That would compress demand. From what I have been analyzing, the market is pricing a more bullish scenario today, but the research debate suggests the timeline and magnitude of future capex remain uncertain. That's a non-trivial risk to the multi-trillion TAM thesis. This debate is one reason why you see volatility in AI and chip names when research headlines surface. Scenarios, 3 pathways and the market response. Let's put this in scenario form, useful for making decisions. Bull case, 30% Nvidia continues to convert partnerships into multi-year system deployments, hyperscalers and research labs accelerate purchases, Nvidia breaks $200 on strong volume and reclaims leadership with expanding margins. Result, significant upside as future earnings are repriced upward. Catalysts, large disclosed procurements, visible supply chain fulfillment, robust guidance. Base case, 50% Nvidia grows revenue solidly but with lumpy quarters due to deployment cadence, competition and macro noise. The stock grinds higher over 12 to 24 months with periodic pullbacks. Long-term holders are rewarded but volatility is the norm. Catalysts, steady data center growth, mixed guidance. Bear case, 20% a meaningful slowdown in AI capex, due to algorithmic efficiency, geopolitical export constraints, or major partner delays, causes multiple compression, Nvidia retests lower support and takes months to recover. Catalysts, negative guidance, reduced hyperscaler orders, regulatory action. When you build position size, choose which scenario you're buying and size accordingly. If you ask me how to act depending on time horizon, short-term trader, days, weeks wait for the $195 to $200 breakout with volume before chasing longs. If fading a move, use the $175 to $178 zone as a mean reversion anchor and keep tight stops. Technical confirmations headlines. Event-driven player, earnings/partnerships avoid taking large directional bets into major catalysts unless you use defined risk option structures. Volatility can blow apart naive long positions, spreads can limit downside. Long-term investor, multi-year stage purchases on weakness, use pullbacks toward the mid-$150 to $170, depending on your risk tolerance, as accumulation windows. Treat Nvidia as a high-conviction, long-duration technology exposure, but size so that a 30 to 50% drawdown wouldn't force liquidation. I don't think we are going to lock the exact bottom on any dip. That doesn't mean we can't average in intelligently over time. Tom Lee's take on NVIDIA, key themes, recent. Valuation still attractive despite size. Tom Lee, head of research at Fundstrat, has repeatedly pushed back against the idea that Nvidia is too expensive or in a bubble. He's noted that NVIDIA's valuation still looks reasonable relative to earnings and compared with other giants. In his view, Nvidia doesn't trade at a frothy bubble multiple, it actually trades cheaper than some consumer staples. Specifically, he pointed out that Nvidia's forward P/E is lower than companies like Costco and Walmart, contradicting the idea it's overvalued just because of size. Nvidia and AI stocks could be poised for higher re-rating. In his most recent public commentary, Lee argued that AI stocks, including Nvidia, are in a strong structural position and could experience further re-rating upward. Despite volatility and macro angst, he sees the AI trade remaining fundamentally healthy and believes markets may still reward leaders like Nvidia over time. Bullish narrative on tailwinds. Lee has described Nvidia's valuation as being supported by powerful tailwinds and has said it would be wrong to conclude Nvidia is near the end of its run simply because price action has been choppy. He emphasizes that long-term fundamentals remain strong even as short-term sentiment fluctuates. In interviews, Lee has compared Nvidia's valuation trajectory to historical tech leaders like Cisco from the late 1990s. His point, Nvidia's forward earnings multiple looks cheap in context of how tech stocks have expanded during enduring cycles, implying potential for further upside if earnings growth continues. Nvidia not seen as the bubble many fear. He's also publicly stated that Nvidia's valuation doesn't exhibit classic bubble characteristics, noting utility from earnings and structural demand for AI compute, which differentiates it from speculative mania. This assessment feeds into his broader bullish view on AI stocks. Note this as well. Even with Nvidia, there is something more you need. Fear not, I am the first and the last. Revelation 1 verse 17 is a call to trust in Jesus and fear not. If any man worship the beast and his image, and receive his mark in his forehead, or in his hand, the same shall drink of the wrath of God, which is poured out without mixture into the sea of his indignation, and he shall be tormented with fire and brimstone in the presence of the holy angels, and in the presence of the Lamb. Revelation 14 verses 9 to 10. Want more information about this? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more that I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly motivate me to continue bringing to you relevant information. Do not miss out on my future videos. All I am imploring you for is your subscription. Thanks for joining us today. Your support means so a lot to us. Do share this video to inform someone who may benefit. Please do watch the next video, subscribe to the channel and share your insights about today's video. Wish you God's mercy and grace. Now is the time to prepare for eternity. See you in the next video by the mighty of Jesus our Lord and Savior.